Hi, Rich. Thank you so much for joining me here today. I'd love to start by getting an introduction to your background.
Thank you. Thanks for having me. My name is Rich, and I'm one of the co-founders of RPS AI. We're a San Francisco-based blockchain AI company. It's kind of a new category now. My background previously was actually in health tech. Did my undergrad in genetics, and ended up starting a healthcare company to help doctors with their back office work from a SaaS standpoint. Sold that in 2019 and invested into Ethereum. Unfortunately, at the top. So I'm not a great investor, more of a product builder. And I spent the last 4 years building in crypto.
What inspired you to actually get into crypto?
I was actually first interested in the technology in healthcare, at least in Canada. A lot of the medical record systems are very outdated, and this antiquated system made it inefficient for people to have their data when they move from place to place, from hospital to a doctor's office to your dentist to your psychologist, so on and so forth. And so I was initially exploring this idea of private blockchains. Unfortunately, the single payer health system of Canada moves at a snail's pace. So I was a little bit disgruntled by how difficult it was to make a difference on certain things. But diving further into this technology, it at one point hit blockchain, more public blockchains in a sense. So that's what initially drew me in. On the AI side, when we were building our health tech company, we're experimenting with natural language processing to make physician workflows easier, as the computer is able to understand words. So we were also kind of exploring on that side as well. So I got my first touch in AI and blockchain, both kind of around the same time.
That's awesome too. I think it's not just Canada that has the slow healthcare
Oh,
system. The UK is also not too great. Um,
I wouldn't
so
know. Cool, cool.
yeah, not too great. So, how did you come about the idea of starting RPS? And maybe you could give a bit of background and context as to what you do.
I think what I do is very boring from the outside. I'm going to try to add some color to it. We we were initially trying to solve this problem of user retention in crypto. It seems like the only way to keep a user was to keep paying them. And whenever the token prices dropped and the users would seem to disappear, we felt like this was kind of a problem. Web3 did about $10 billion dollars of airdrops in the last couple of years. And in traditional business, and that was my original background, building traditional businesses was CAC, your cost of customer acquisition to LTV or your lifetime value. And that ratio was like two, $3,000 a customer, which wasn't very sustainable. We wanted to learn more about our customers. And in a traditional startup, what you used to do was you would get on a call like this with them and ask them questions. Why do you like the product? Why do you dislike it? And because there was this pseudo anonymity layer or sense of privacy that crypto had brought, people were uncomfortable doing that. So me and my co-founders, both of them being machine learning engineers and highly technical folks, we thought of essentially using these new AI language models to build these really, really good chatbots to speak with the user and in turn be able to extract important information from them. And when we talked to a couple of customers, they were really excited about this. They're mostly businesses, crypto businesses. Um, then they asked, can it do more? Can it actually just help them do the thing they want to do, execute the transaction or buy the NFT or so on and so forth? They wanted extra features. And we started developing these features, and slowly, as it became more and more automated, it became essentially an autonomous agent. And when we're building these, we realized that using the AI models out of the box that were out there today, OpenAI, Google, Mistral, Llama, there were a lot of issues with fine tuning these models for crypto use cases. And identifying that particular gap made us realize that the infrastructure was not ready for productionizing these agents at a mass scale, especially enough for users to trust their wallet to. not at that level yet. So because my co-founders actually built up an LLM in 2019 for enterprise. So we decided just to go deeper in the tech stack and build the infrastructure for other people to build these agents. That's kind of how RPS came about.
Interesting. So are you building your own LLMs as well?
Yes, yes, that's
Okay.
part of it. Yeah,
Okay.
technically what we're called is a large multimodal model, so an LMM. And within the multimodal aspect, there is a language model and a prediction model.
Okay. Interesting. And so what are the key problems you foresaw with the current Gen AI models that inspired you to tackle this a little bit more? I know that you touched on the crypto side of things, but would love to learn. I think you also mentioned hallucinations before. What do you see the key problems being with current models?
Yeah, so the main problem we figured out was Web2 AI models don't work for Web3. And the what we wanted to create was an AI that non-AI engineers, most of the engineers in crypto are not AI engineers, um, to be able to build these AI applications or decentralized applications straight out of the box. They didn't need to go to school for machine learning or data engineering. It was going to be reliable and accurate on day one, and minimum fine tuning was required. And at the same time, it was going to solve three big issues: eliminate hallucination, access live blockchain data, and it was pre-trained for crypto. So I already understood native crypto operations, terminology, intents already within the model itself to make it really easy to develop AI crypto applications. The hallucinations aspect is coming from the side that these large models have so much in them. Between GPT-3 and 4, GPT-4 has 1.2 trillion parameters. And most of those parameters are actually not exactly necessary for crypto. We believe in the future we'll have different niche models for individual verticals, like a healthcare AI or a fintech AI or a blockchain AI. And we're kind of building the blockchain side of things. And if we were to say in 5 years' time, instead of using wallets, use AI agents to interact with each other with protocols on chain, then we would need a very robust type of model by itself that is very reliable and accurate so that we can execute a lot of these things automatically. And why? Well, one of the major hurdles for crypto today is it's confusing. Like a lot of DeFi is very complicated, and they make it very complicated. And all of this, I think, can be abstracted away using AI agents.
Interesting. So in 10 years, what is your vision for how users will actually use these AI agents to interact with the blockchain? Will it be like, for example, just typing into a chatbot to start executing transactions or things like that? Like how do you see the use cases going for the end user over the next, I guess, 10 years?
That's a hard question to ask.
Yeah.
Let me just ask my AI. Um, 10 years. I think that for what the technology of crypto is meant to do is to establish trust. Without seeing someone, without knowing someone, it's a technology of trust. And AI is a technology of efficiency. And I think these two things, when they're working together, makes trust more efficient. So in 10 years, I imagine that right now, all the inefficiencies across borders, across political spheres, across different cultural spheres, is that there are a lot of, I think, trust inefficiencies. With crypto blockchain improving in the next 10 years, hopefully we'll be able to see a much better world because of efficient trust. I know that's a very philosophical and type
No,
of
but
response, but
I think 10
I
years
would
is
love to
probably
say
quite a big time frame.
quite a bit. Yeah. Bitcoin to a million. No.
Yeah, I know. Hopefully by that point, because I think you've got blockchain and AI, which are just expanding at incredible rates and just innovating so quickly. Can't remember who it was, but there's a famous AI researcher who thinks we'll reach AGI by 2029. So that having AGI combined with blockchain would be interesting. Are there
Specifically
actually,
2029,
yeah,
like that specific year. Oh wow,
yeah.
okay.
And he predicted it, I think it was in the 90s or the 2000s.
Oh
And
really?
he wrote a book about it. And he went on Joe Rogan's podcast, and he still thinks 2029.
Oh wow, okay.
Yeah,
So it feels
pretty
like almost
interesting.
he has like a
Yeah,
download meter on his computer. It's like 2029 and like the files are
it's
flying through.
loading. I know. He's done it just based on the pace of like innovation of like technology.
Oh,
And so
mhm.
back in like the 2000s or 1990s, he like looked at the graph and was like, okay, by 2029 we'll reach this point. Still sticking with it, which is cool.
Oh,
Um,
that's cool.
are there, I guess, many other competitors doing the same thing as you guys in the blockchain space?
I've been fairly deep in what I do for the last very, very long time, and I've been sleeping very much for it. I haven't seen anything exactly that is a foundational model specifically for crypto.
Yeah,
Um, and I've spoken to a lot of investors, and it does seem like this seems to be a novel idea, even though it seems very obvious, right?
yeah,
You have OpenAI and Mr. All these huge companies for Web2. You imagine there might be the same thing for Web3, but it doesn't seem to be the case. And without going too much of the specifics of the technical aspects, I think people are slow, like the fintech Web2 AI area. Those companies that are building specifically foundational models for fintech, like Bloomberg GPT, for instance, all they have actually more similarities with us than general AI models like OpenAI. So we're a bit more similar to our fintech cousins than these guys. So in terms of competitors, like in terms of methodology or the training methodology, we're more similar to them. So we haven't seen any particular competitors yet, although we're trying to develop this as quickly as possible in any case, shape, or form, anyway.
do you see it as a risk that, for example, OpenAI or fintech LLMs could look at crypto and be like, "Oh, this new market looks exciting," and expand into it? Do you see that as a risk for your business, or
I get this question at least like twice a week.
yeah,
um, so I'm at Stanford GSB, and Sam Ullman was coming to talk, I think, a couple weeks ago, and I was literally just gonna walk up to him like, "Come on, man, just tell me, crypto or not? GPT-5. This is gonna answer all like 50 questions back at home." And when I saw the line, it was like out the door, across the hallway, and like all the way back. And there was like 300 people in line. And I was like, oh gosh. um, so I wasn't able to ask him, but one of our angel investors does work for Google AI. And we had a long conversation about this. Primarily, it's just a business decision. Because OpenAI and Google, their customers are not focused on Web3 data. OpenAI makes about 2 billion in revenue annually, 460 institutional customers paying about $7 million each annually. These are big institutions, and they're primarily the revenue drivers for OpenAI, and they're not focused on Web3. So the money is not in Web3 for them. And that's why OpenAI and these Web2 AI companies are training on the wrong data. Well, their data, Web2 data. And in order to train it for Web3 use cases, you actually have to redo and append the entire architecture, which costs a lot of money. I also asked the question, does crypto really want to use centralized AI? Most people that are trying to build a decentralized web would say no. In fact, they want to use decentralized AI, which is something that we will be looking at down the line once we have a stable and reliable model. And I think that's one of the superpowers that crypto AI companies have is they can leverage a token network. I don't think OpenAI is going to be pushing a token next week. So yeah, that's my response for that.
you never know. Imagine.
Alpha, secret alpha,
Yeah.
OpenAI coin.
Yeah, I know. I think the way that large organizations look at entering new markets is they almost look at like the opportunity cost side of it. If they're already so established in the existing market, um, going back to like step one and redoing everything does seem like a lot of effort. Um, so will you be a primarily B2B or B2C focused product?
That's a really good question. There's a story of a company that we're not going to name that spent 1.6 billion on training a 60 billion parameter model with 16 researchers. And yeah, nobody knows of them because the model sucks. I think that's an exercise of just having way too many resources and trying to cram too much data into one thing without actually understanding what you're attempting to do. Uh, I think starting small is always a good idea. That's where GPT-1 was, where BERT was. And to build a foundational model is an ambitious sort of thing. And we need to start small to perform validated learning. And I mean my validated learning as a founder, not the AI. We need to understand the problems that exist within these individual verticals and how AI will help them. I always say that it's better for a founder that's working in AI to be someone that's very knowledgeable about that domain, not just someone coming out of, having a PhD in machine learning. That's not necessarily going to help you understand the customer's problems. Because, like we said, AI is a tool of efficiency. Efficient what? There needs to be a problem to make more efficient of. So in the beginning, we will be very B2B focused, where we look at specific business customers. And we call these design partners because we're charging them a lower rate and we're working very closely with them to understand their problems and build a model that's very suitable for them. And once we have established most of these verticals, and these companies may be trying to fine tune themselves, but they're not like a fully committed AI company like us, right? We're always going to be spending more time with the data. We're going to have more data engineers. We're going to have more access to compute. Their focus is probably trading or some game or a customer service bot, right? It's a little bit different in focus. So we're going to be providing these smaller models and then using this specialized method to train a larger model using these smaller models to be able to create a little bit more of a general purpose model that includes all of these kind of smaller models within them. So if any business were to come and use the general model, it's already been battle tested. And it knows what that particular use case is, whether it be in CFI or MEV or in AML or in NFT risk assessment or something of that sort. It's able to do all of these things really well because it was trained and specifically designed for that particular purpose. So we will be B2B in the beginning, but we think that a Web3 model should decentralize over time. That over time, Web3 is full of very passionate open source developers. And it's very rich in that, and we should keep that. So our base foundational model will be open source. We may consider leveraging a token to bring the community's values together. And at that point, we'll start to move and shift towards more of a B2C or I guess B2 developer type of model, while retaining some of our enterprise AI aspects for the core company's focus.
And when you're speaking to these initial group of businesses, where are you finding the demand to be? Like, what use cases are they actually interested in for these AI models?
Okay, that's a really good question. I feel like I'm speaking to a very experienced venture capitalist.
No, I just like to
And
ask questions.
it's good. I trained for this. um, yeah, the use cases we see right now are talking to a lot of central exchanges. Every single hype cycle, there seems to be a lot of new people that come back into crypto. The saying is, if your mom's asking how's Bitcoin, it's time to sell. But usually, every time there is a hype cycle, central exchanges see a lot of new accounts, new people wanting to invest in crypto or see what it's about. And so these centralized exchanges have a big effort into improving the UX of their products. Generally, it's an app or a website of that sort. And they've seen in Web2 that all these AI parts are able to make that part, the user experience, really, really good, really easy, right? If you could just say, hey, just remind me to buy Bitcoin when it hits 28,000, because I keep forgetting and I always miss that. So something simple like that, when it's toggled using a text prompt, then it makes the whole process much easier, right? You don't have to look at all the graphs and things like that. So that's like improving UX. So that usually comes from either centralized exchanges or decentralized exchanges or wallets, things that consumers have high touch point for. On the other side, there is more analytics. AI is really good at ingesting lots of data and be able to either make a prediction about something that would happen up to a certain probability, or be able to recognize patterns or trends. So in this camp, there is anti-money laundering or research for investment purposes of that sort. So that's analytics. And there's also this idea of fully on-chain autonomous agents, which are like these super co-pilot assistants that know everything about you, your habits, your strategies, and they can autonomously think and do a lot of different. They're integrated with many, many different applications, and they almost like know too much. You actually have to optimize them to do certain things. These things are kind of what a lot of people are excited about, that in the future we would have these agents and they would work for us and make money for us or trade or learn more about different things. And that's kind of three categories. Although like within these categories, there's so much more. It gets a little bit deeper within each. And yeah, happy to go into that as well if there's any interest.
Yeah, what use case are you most excited for, or do you find most interesting?
I think there's two things that I think is interesting. One is this idea of DAO management. Uh, DAOs have been very popular a few years ago, and now they seem to be going away. Um, there's always been a problem with trying to digitalize governments, was governance or governments, I guess. And they're fully on-chain organizations of people that seems to inherit the biases and corruption and problems that real life organizations have, while we were trying to build something a bit more idealistic. I think there may be a potential for AI to be able to streamline or make efficient this trust process, because it's harder for AI to kind of affect that in real life governance. There's so many more steps that are happening. But if it's already coordinated on the blockchain level, DAO management could really be improved. And that type of thing is really exciting for me. The second part would be more on the security side, because I believe the future of finance is DeFi. I do think that in the future, cryptocurrency will be a very important form of value transfer, exchange, and accrual. But I don't think we're going to be able to get there without more and more security, more and more ways to feel safe when we're dealing with wallets or cryptocurrency or money in general. So I am very passionate about that side of things as well.
What do you think needs to happen for DAOs to actually work and become efficient?
No human participants.
All AI.
Yeah, because people just have many opinions that are mostly contradictory to their own interests often.
Yeah.
Yeah, I guess that would be the half joke, half truth of an answer that I can come up with that is very easy to solve. But we know that's not going to be the case. So I think to approach that 99% equitability would be a combination of AI with human governance within DAOs.
I think when you start managing people, you realize that it's actually not the easiest thing to
Oh
do in
yeah,
the world.
yep, yep. That's the hardest thing.
And so taking it back to, I guess, the data training side of it, um, what are the core differences between using blockchain data versus, like, for example, the traditional data a company like OpenAI is using?
So I'd like to break this up into three pieces. Our multimodal aspect means encoder, decoder, and prediction. These three types of models individually use different types of data and training methods. And they solve three areas of need for agents. or applications in crypto. Encoders provide a output of either 0 or 1. It's the right answer or nothing. While decoders give you anything between 0 to 1, which can be an infinite number of numbers. And decoders are great for creative outputs because it can show a range of outputs. And it's the highest probability that generally wins out. While encoders are very deterministic. And that's very good for financial related technologies because we want specific inputs to translate to specific outputs. I don't want to connect my wallet and for me to write in some sort of command and for you to assume like 3, 4 things because you think it's a good idea because you creatively came up with them on the spot and do something I don't want you to do, right? Because I don't think AI is at the point where it's intelligent enough to basically override our decisions. And then there's a prediction model, which is time series data. The data that we want to train a prediction model is split up into multiple layers because time series data has these things called frequencies, and they're in different frequencies. Like blocks, for instance, when you put it into the transformer, it's going to give you blocks. If you give it transactions, it's going to predict transactions. If you give it prices, it's going to predict prices. And these sit on different frequencies. So we have to set up these things called projection layers in between for it to start to understand all of these things. So these 3 different types of models are kind of trained with, I guess, similar data, but they have to be processed and cleaned differently.
And are you working with all 3 types of the data?
Not at first. We're focused primarily on the encoder because it's the low-hanging fruit. Most customers want a reliable model to start using tomorrow. So encoder first, and then we'll start blending in decoder and the prediction kind of by itself after.
And what stage of development are you currently at?
Yeah. Foundational models cost a lot to build and also take a long time. So far, we've signed up data partners. We're talking to Near, Solana, Certic, Coinbase, a lot of these companies to understand what their problems are, see what kind of data they have, and start experimenting. We have built a prototype for swaps, just for one like use case. It's reached 98.6% in accuracy. So we believe our methodology is sound. And right now we're raising money from VCs. We're talking to a bunch of them right now. And we have 6 months of EVM bytecode, which is a more simple version of Solidity. And we are training on, we also have labeled data for EVM blockchain. So we're starting to kind of work with that and build out a kind of first release of sorts. And then afterwards, we'll start working with these companies, building models for them, doing validated learning, hiring more data engineers, acquiring more data, processing the data, hiring labelers, label the data, so on and so forth. Eventually getting towards, we have a good amount of high quality data and models to start building our foundational model.
Okay. And what is the typical time frame to build, I guess, foundational models?
In terms of the training itself, it could just be like a week or so, where we would train and then we would stop, go look at the outputs that it's giving, test it, and then go back to step 2 or step 1 and just continue this process over and over. We estimate between 6 to 12 months before we can have a reliable model that we're proud of to publish to developers. But the smaller models that we intend on delivering to our customers, we can get that done in the next month or so. So we will be shipping that out very, very quickly to understand if these are the types of models that can benefit them the most.
What inspired you to get into the startup world?
I think it's really interesting to build, like I'm obsessed with this thing called a perpetual machine or a perpetual design system, which is this idea of something that can live on by itself forever. That's the type of business I try to build. In the beginning, that's what got me hooked. I was like, oh, it'd be interesting if I create this system that prints free money and then I just have to just sit on the beach and just drink margaritas all day. That would be great. But then as soon as I started building businesses, my previous company had 75 employees. And the proudest moment I have, I worked on a startup for 6 years, solo founder. I grinded every single day. I got super overweight at one point. Was the proudest moment I had was going in front of everyone that was within the company, all of our physicians, nurses, employees, staff, everything. And I was able to announce that I was going to be buying free extended healthcare benefits for everyone forever. And that we were at that point where I could really make an impact to families and people that worked in the company. And that was the happiest moment of my life and my career. It's not signing another contract or getting another investor, but it was really like feeling that I made a difference. I mattered. And that always stuck with me. I came into this wanting to build a perpetual money-making machine, but I realized it's all about people and relationships, building with people, and that making an impact with people will give me my salvation I'm seeking. So why am I in startups? It's because they're really interesting. In the beginning, you're setting up these systems, and in the future, hopefully you can benefit people.
A lot of people from the outside looking in, entrepreneurship is like it's seen as an easy way to make money. And then you start a startup and then you realize
Oh
it's
boy,
far from that. And it's like
99% risk.
there's a saying like you quit your 9 to 5 to work for yourself, and then you end up working like 24 hours a day.
Yeah.
What was your biggest learning from your previous company?
I think it's also around people. My first startup was a solo founder. I knew how difficult it was, mentally, physically. And in my second startup, I had two other co-founders, which I was very lucky to be very, very great people. In fact, one of them worked so hard and I felt like I wasn't contributing very much. I decided to transfer some of my equity to them. And I said, hey guys, I'm not carrying the weight as I once did. You should have more equity in the company. I've always kind of gone with my gut instinct. Like, this is a person I enjoy working with and I can trust. Over the years, I've started to trust that gut feeling, because when that didn't really happen, bad things happen.
Mm.
So it was honing this kind of people sense that is different than, say, someone that's just coming out of business school or something, or computer science degree and starting to do a business. They may not need it. Maybe they built something that's just fantastic and they just flies off and they sell it for 100 million or something. So that does happen. But when it comes to most of what happens in business world and building companies, you deal with people, it's honing the sense. So I think maybe that's the biggest takeaway. It might sound a little generic, but that's the only thing I can think of right now.
How do you now, for example, how do you, I guess, evaluate that you can trust someone? Or like when you're hiring, what do you particularly look for in terms of like the trust side of it? How do you know that you can trust someone?
And after I met my current co-founders, after just kind of talking, we weren't even really building anything special, just talking for close to a year, building that trust and just kind of vibing. Once we got into Orange DAO, I decided to fly to their home country. It's a part of the world that I've never been to ever, and no one else looks like me or eats the food I eat. And I had to learn a whole different language just to get around. So I went there and I lived with them for a whole month. And I was away from family, I was away from my fiance that I just proposed to, and I was like, bye, see ya. And then I just go over to the other side of the world to meet these people that I believed in. And so that trust was kind of developed over time through many examples. I always am very optimistic and open. Trust is something that I think you earn by default when you work with me. And they were really able to step up to that as well. So it's really, I think it's just over time,
Yeah.
You develop an affinity for trust. Yeah.
I think it gets refined. Like the more you get into business or the more you interact with different people, it gets refined, and then your gut instinct becomes stronger.
Yeah. It's almost like training an AI.
Yeah, I know. So what is the best way that people can support RPS?
Yeah. If you're a machine learning developer, contact me on Twitter right away, right now. Otherwise, I guess you can follow us on Twitter at RPS_labs. RPS stands for rock, paper, scissors, because we feel like the right tool for the job gets more done.
I like that.
Yeah, we don't take ourselves too seriously. And just stay tuned. We're really excited for what we're doing. We really think this is going to make a lot of businesses have a much better time in deploying this disruptive technology within crypto. And it's doing so much more for Web2 already. So yeah, just follow us and stay tuned.
Awesome. Thanks so much, Rich.
Yeah. Thanks, Maddy. Thanks for the opportunity. I appreciate this a lot.